Never do these 5 transactions in a year, otherwise a big notice will come from income tax. Hello friends, you are busy with your daily activities. Suddenly, a notice comes at your door. You open it anxiously and nervously and see that it is a notice from the income tax department. Your heart starts beating faster. After all, what happened that you were sent a notice from income tax? You didn't do any illegal work, you didn't do any tax evasion, but how did you get into this trouble? You immediately start looking at your bank statements and transaction history and can't figure out where the mistake happened. This happens not only with you, but with many people because there are certain transactions that are closely monitored by the income tax department. If you do this transaction unknowingly and don't report it properly, you may get a notice. It is very important to be careful about these transactions. Otherwise, big difficulties may arise later. Therefore, today we will tell you in detail about those 5 important transactions which should be taken care of before doing and whose correct information needs to be given to the income tax department. But before that, if you are new to our channel, please don't forget to subscribe to the channel so that you will be the first to get our new video updates. So let's start today's discussion without any delay. The Income Tax Department in India monitors every high-value transaction to curb tax evasion and black money. In the digital era, now every transaction information reaches the Income Tax Department through banks, financial institutions, and other agencies. Especially, the department is more cautious about large cash transactions. The government has fixed the limit of certain transactions, after crossing which reporting becomes mandatory. If you do not follow these rules or do not show these transactions correctly in your tax return, then you are more likely to receive a notice from the income tax department. Therefore, if you want to be vigilant about your financial matters and avoid any trouble, then it is very important to have complete information about these transactions. The first transaction, which can land you in trouble, is related to depositing more than 10 lakh rupees in fixed deposit. Many people invest in fixed deposits to protect their savings and earn interest. But if you have an FD of more than 10 lakh rupees in a fiscal year, then the income tax department may look at you. Whether you have deposited this amount in one go or in separate go, the bank has to inform the CBDT. Especially if you have deposited this amount in cash, then it can become a matter of doubt. The income tax department may ask you about the source of this money, and you may face legal action if you do not show it correctly in your tax return. So, before investing in FD, make sure that you do it through check or online bank transfer and enter the information correctly in your income tax details. The second transaction, which may come under the notice of the income tax department, is related to cash deposits of more than 10 lakh rupees in bank accounts. If you have deposited cash amount of more than 10 lakh rupees in any bank or cooperative bank in a fiscal year, then the bank has to give its report to the income tax department. This rule applies only to savings accounts, while current accounts and time deposits are excluded. Income tax department scrutinizes such high-value cash deposits, and if you do not have a legitimate source of this money, you may face legal action. So, if you have a large amount of money being deposited in your account, make sure that you have a proper source of it and show it correctly in your income tax return. The third transaction, which can get you into trouble, is related to the sale and purchase of property. If you have bought or sold a property worth 30 lakh or more rupees in a year, then this information has to be given to the income tax department of the property registrar. The government is very cautious about such high-value transactions because many times black money is used to invest in properties. If you have done any big property transaction and have not reported it properly, then the income tax department may question you about it. Especially If the transaction is done in cash, then the matter becomes even more serious. Therefore, buy and sell any property through check or bank transfer and keep proper accounts. The fourth transaction, which may come under the radar of the income tax department, is investment of more than 10 lakh rupees in shares, mutual funds, debentures, and bonds. If you have invested more than 10 lakh rupees in the stock market in a fiscal year, then the income tax department can get this information. Companies and financial institutions have to report such high value investments. If there is a big difference between your investment and your declared income, the income tax department may question you about it. Therefore, if you are investing in the stock market, mutual funds, or other financial instruments, make sure that there is a balance between your income and investment and reflect it correctly in your tax return. The fifth transaction, which can bring you under the radar of the income tax department, is related to cash payment of credit card bills. If you paid a credit card bill of more than 10 lakh rupees in cash in a fiscal year or made a cash payment of more than 1 lakh rupees at one time, then the income tax department can check it. The government is very strict about cash payment because many times it is used for tax evasion and laundering of black money. If you made any such payment, make sure you have the proper source for it and report it correctly on your tax return. Apart from all these transactions, there are some other financial activities which are monitored by the income tax department. For example, if you gave or received a large amount of money as a gift, reporting is required. Similarly, if you are repeatedly depositing or withdrawing large amounts of money, the bank may suspect it and report it to the income tax department. If you get any notice from income tax department, then there is no need to panic. First, organize all your financial documents and ensure that you have accurate records of all your transactions. If you are in doubt about any of your transactions, contact your chartered accountant or tax advisor and respond with accurate information. Apart from this, it is very important to follow the income tax rules. If you keep your financial matters transparent and report all important transactions correctly, then you will not face any problem. Remember, in an effort to save tax, don't accidentally take any action that could land you in legal trouble. If you like our content and want to make our efforts even stronger, you can support us through the QR code given in the video or the UPI ID given in the description. Your every small contribution is valuable to us and will inspire us to make even better and informative videos. Your support is our strength. Also, if this video taught you something new or you felt that this information should reach others as well, then do not forget to like and share the video. If you have any questions or suggestions in mind, then do let us know in the comments. We look forward to answering your every question and listening to suggestions. And yes, if you want to stay updated with our every new video in the future, then subscribe to the channel and press the bell icon so that you get every new information first. GRT Business always strives to give you accurate and reliable information. Our news is obtained from various news agencies, public opinion, and public sources. We try our best to verify every report, but we are not responsible for any dispute or error. Our sole aim is to provide you with accurate and reliable information.